Hi traders, welcome to this Blueberry Markets video update with me, 𝖢𝖥𝖣yi, Senior Market Analyst. In this video, we're going to be taking a look at the Great British Pound. We're going to be looking at, is this market about to reverse? Now, pound US dollar has been very bullish throughout the entirety of this year. And we can see that the price has now reached a critical level, this 1.34 handle, which were the highs of September 2024, where we saw that obviously that flip in US dollar strength, and the market fell quite dramatically down to this 1.21 handle. Price has now made its way back up to this point. So is this the point where we start to see a turn for pound US dollar? Potentially. Market is still very bullish here. We can see that the market's making higher highs, higher lows from a technical perspective. But if we go take a look at some macro indicators and some sentiment stuff, it could be a potential for a turning point here. So if we go into the currency strength meter first, we can see that there is some weakness in the pound at the moment. We came from this kind of -2 area up into the -1s. But if we just go over to the line chart here and have a little look at the pound, which is the orange line, we can see that we're at these kind of plus fives, and you can see that it continued to kind of come from those strong levels and is showing signs of weakness from a technical perspective. When we go take a look at the fundamental tracker, things are a little bit concerning here as well. So you can see that we have a number of macro releases that are showing negative compared to what has been forecasted and what has actually come out. So a few of those, for instance, CPI, which is positive for consumers, but negative in terms of what this might mean for a central bank. We can see that that's come down to 2.8%. The only kind of concerning one here is core CPI, which remains pretty high at 3.5%. GDP growth is a bit of an outlier. We'll come to that in a second, as well as retail sales, because we do have some key data coming up very, very shortly, including retail sales tomorrow. So we're expecting a potential drop from 1% down to minus 0.3% on the retail side of things. And if that does occur, does it show us that consumers are trying to spend less within the market at the moment? So that's something to be potentially concerned about and could have an impact on future GDP growth here. Now, GDP growth is what everybody's looking at when it comes to the UK, because that is what the sentiment has been talking about recently. But you can see that, it is climbing at the minute. And if that narrative remains the same, then pound may stay a little bit elevated. If we do start to see some changes to this, though, then maybe there could be some time to kind of price in that pound weakness. We can also see from the climate count change that has come in a little bit higher than previous. It was 16.5 up at 18.7. That is a little bit of a sort of positive when it comes to forecasts, but a negative in terms of the kind of actual there. And then we can also see other factors as well, services PMI being one of those too. And when you even look at the commitment of trader reports and the sentiment reports, we can see that there is a kind of selling pressure when it comes to the UK right now. March 25, we're up at 44,000 contracts. They've come down to 6,509 contracts now. So this is showing us that hedge funds are selling the British pound at the moment at quite an aggressive level. If we just take a look at what they did going in sort of last week's data, we can see that they increased short positions by 4,000, decreased long positions by 6,000. So essentially getting short by 10,000 contracts, which is quite substantial when you look at the commitment of trader reports. Now let's go back over and have a look at some of the technicals then, because the market, like I said, is still bullish here. We're still trading to the upside. There's still higher highs and higher lows. What I'm looking for here right now is a potential for a little bit of divergence to form. So, I don't necessarily want to sell this area here right now, but what I would be looking for is any kind of key changes, that being one, this nice little kind of push up here from the recent 4-hour chart. Let's say the 4-hour chart breaks the 50 moving average, makes and forms new lower lows. then that could be a sign that we are going to see a more severe pullback here. If the market kind of bottoms here, pushes back up into 134, I'd be looking at potential failures up at this area as well to see if we can get a bit of a move back to the downside. We can see the 4-hour 50 moving average is fairly close to price action at the moment. If we look at the daily chart, it's still quite a way away. We're around about 340 pips away, 2.6%. If I just have a little look at average ATR on a daily basis, it's 110 pips. So we are ATR, just above 2 ATR away from current 50 daily moving average. So there is still that kind of opportunity to see price kind of revert back to the mean here. And that means that we could be trading back down to sort of that 1.3 level before seeing maybe either continued dollar weakness or a bit of more of a kind of breakout here and a move even lower. So just some things to consider. We can see that obviously from the macro picture, the UK isn't looking too pretty at the moment. We also saw the IMF release a statement yesterday that they believe the Bank of will cut rates 3 times this year. So there's a lot of talk that the Bank of England could start cutting interest rates a little bit more aggressively than expected, and that could weigh heavily on the pound. So keep an eye on the pound in the near future. Look out for those strong occurrences. Let's see if there is some movement. So thanks for watching, and I'll catch you in the next video.